Today, we're going to learn a powerful trading strategy based on candle range theory. The best part? It works beautifully across crypto, forex, and even stocks. But before we dive into the actual strategy, there are two key concepts you need to understand: candle range and CISD, change in state of delivery. Trust me, if you skip this part, you'll miss the real essence of the strategy. So let's start with the basics. What exactly is a candle range? Imagine this. We have point A and point B on our chart. The distance between these 2 points is what we call the range. Now, how does this look on a real chart? Here's the euro to US dollar chart on TradingView. From this point to this point, the distance is our range. To break it down further, suppose we mark the range of a one-day candle, from its high to its low. If we shift that same range onto the 4-hour time frame, it now becomes a 4H range. And if we further bring that range down onto a 15-minute chart, you'll notice how the range adjusts itself in detail. This is the foundation you need to keep in mind. Now comes the most important part: CISD, or change in state of delivery. Do not skip this, because this is where the magic happens. The market basically has two states: the buyer's state, the seller's state. Whenever buyers are dominating the market and suddenly sellers take over, that's CISD. And the exact opposite, when sellers dominate and buyers take over the control, again, we have CISD. But how do we actually mark this on a live chart? Let me explain step by step. Imagine this. We have buy-side liquidity sitting here. The market makes a strong upward move and sweeps that liquidity. At this point, buyers are clearly dominating. Now, the question is, how do we know when sellers take control and where exactly should we enter? This is where you need to focus carefully. Here's the rule. The leg that sweeps the liquidity, look at its last opposite colored candle. The closing of that candle marks the CISD level. So, for example, after the liquidity sweep, if the last opposite colored candle's close gets broken and the market gives a closing beyond it, it confirms that control has shifted from buyers to sellers. That's the logic of CISD. Earlier, the market was in the hands of buyers, but after this break, sellers are now in control. Don't worry if it feels a bit heavy right now. When we look at a live trade example, everything will become crystal clear. Now that we understand candle range and change in state of delivery, CISD, it's time to dive into our actual trading strategy. We'll go step by step so you can follow along easily. Before we begin, make sure your time zone is set to UTC-4, New York time, as this strategy is based on those session hours. First, select the 4-hour time frame on your chart. Let's suppose we have a 4-hour candle. For example, candle number 17 and candle number 21. Candle 17 represents the range from 17 to 21. That's 4 hours. Similarly, candle 21 represents 21 to 1, another 4-hour range. This is how we define our 4-hour candle range. Next, we mark the high and low of candle 21, which gives us the range. Remember, we mark the high and low after the candle closes, not during. Once candle 21 closes, the next candle will form from 1 to 5. Jump to the 3-minute time frame. Here, the high and low we marked earlier now become our range on the 3-minute chart. This allows us to see the range in more detail and spot potential entry points. Watch the chart for a range sweep. Here, the market breaks our high to sweep liquidity. Mark the CISD level. Here's the rule. Look at the leg that swept the liquidity. The last opposite colored candle's closing is your CISD level. The market closed below the CISD level, confirming a shift in control. After the CISD level is confirmed, it's time to look for entry. Look for fair value gaps, FVG, order blocks, or breaker blocks on the chart. Here, a sell-side FVG has formed. This is where we can place our sell entry. Target setting. Most traders target the next liquidity level, but I always recommend a safer risk-reward ratio. 1:3 or 1:4. This ensures consistent profits without overexposure. In the next part, we'll look at a live trade example, so you can see entry, stop loss, and target in action. This is where it really clicks. All right, let's look at a live trade example so you can see this strategy in action. Step 1. Mark the 4-hour range. The first thing we do is mark the high and low of the 21 candle. That gives us our 4-hour range. Step 2. Shift to 3-minute time frame. Next, we shift the chart down to the 3-minute time frame. Now, this becomes our detailed range. Here, we mark both buy-side liquidity and sell-side liquidity. Step 3. Wait for liquidity sweep. Now, we wait for price to break this range. In this case, price made a strong upward move and swept the buy-side liquidity. Step 4. Identify the CISD level. Here comes the most important point, marking the CISD, change in state of delivery, level. Look at the leg that swept the liquidity. The closing of the last opposite colored candle in that leg is our CISD level. Mark it on your chart. Now, wait for price to break this CISD level. Step 5. Confirmation of control shift. As soon as price breaks the CISD level and closes below it, we know control has shifted from buyers to sellers. Step 6. Entry on FVG, order block, or breaker block. Once we have CISD confirmation, we look for an entry setup. This could be on a fair value gap, FVG, an order block, or a breaker block. In this example, price forms a fair value gap. That's where we take our sell side entry. Step 7. Target and risk management. For targets, always stay on the safe side. We aim for at least 1 to 4 risk to reward, which is both realistic and consistent. This ensures we protect our capital while still capturing strong moves. And that's how the full strategy works, step by step with a real chart example. If you found this video helpful, stay connected with us. We share more powerful trading lessons and strategies right here on this channel. Make sure to like, subscribe, and turn on notifications so you never miss the next strategy breakdown.